Welcome back to Investing Talk Podcast. Today we're zeroing in on a company that touches many of our lives regularly, Kroger. Our mission for you today is to explore what to look for in their upcoming Q2 2025 earnings report. We're going to break down the key expectations, their historical performance, and the broader market factors at play, so you can walk away feeling exceptionally well informed and ready to understand what's truly moving the needle for this grocery giant. And hey, if you find our discussions valuable, please subscribe, like, and leave a comment. It truly helps us deliver more insights. You can also consider buying us a coffee. And if there's a specific company you'd like us to look into, just leave a comment below. Okay, let's unpack this for you. Kroger is just a massive player in the consumer staples sector, right? And their earnings calls always offer fascinating insights into the consumer landscape itself. This quarter's report is set to be particularly interesting given the current economic climate and how a grocery powerhouse like Kroger navigates it.
Absolutely. What's truly compelling here is observing how a company within a traditionally defensive sector like grocery manages to perform amidst both, resilient consumer demand and the broader macroeconomic uncertainties we're all experiencing. We're definitely looking beyond just the headline numbers today. We want to understand the underlying trends and strategic moves that are truly shaping their performance for you.
Exactly. So let's jump straight into the specifics of what analysts are anticipating for this upcoming report. Kroger's Q2 2025 earnings report is estimated to arrive around September 11th, 2025. That gives us a clear date to mark on our calendars for when these numbers are likely to hit. Now, when we look at the key financial figures, the analyst consensus for revenue is currently sitting at $45.3 billion.
$45.3 billion.
Yeah. And for earnings per share, or EPS, the consensus estimate is $1.01.
Okay.
But it's not just about those quarterly projections, right? We also have to frame this within Kroger's own full-year guidance.
That's crucial.
For 2025, they've projected adjusted net earnings per diluted share to be in the range of, $4.35 to $4.45. And their adjusted FIFO operating profit, that's first in, first out operating profit, a crucial metric, especially for inventory-heavy businesses like grocery stores.
Right. It shows how efficiently they're managing stock.
Exactly. That's projected between $4.6 billion and $4.7 billion. So these are the goalposts the market is watching.
And if we connect this to the bigger picture, these estimates provide our baseline for what the market expects. But what's truly important for you, the listener, is not just whether they hit these numbers, but how Kroger performs relative to these expectations. And crucially, we'll be watching how their actual results might influence their reaffirmation or potentially any revision of that full-year guidance they've already put out there. That will give us a real sense of their confidence and their strategic trajectory moving forward.
Okay, now here's where it really gets interesting. Kroger's recent track record. How have they performed recently? Because that tells us a lot about their operational strength and consistency. For example, in Q1 2025, their actual EPS came in at $1.49 against an estimate of $1.45.
Right.
That was a positive surprise of 2.76%.
Ah.
What's significant is that this isn't just a one-off. This continues a trend over the last 4 quarters where they've generally met or, slightly exceeded analyst expectations.
And this consistent outperformance, even by a small margin, it's a valuable signal, especially for you if you're seeking stability in these volatile markets. It suggests that Kroger has a strong grip on managing expectations, maybe even employing a somewhat conservative forecasting approach, which can build investor confidence. It's not just about hitting the numbers, it's about doing so predictably.
Right. Predictability matters. And beyond just that headline EPS, we also see some key metric trends that are worth highlighting for you. Identical sales, excluding fuel, were up a healthy 3.2% in Q1 2025.
That's solid organic growth.
Yeah, it really is. It shows how well their existing stores are performing. And e-commerce sales also saw robust growth, increasing by 15% year over year in Q1 2025.
15%? That's a significant leap.
It is. It reflects how consumers are increasingly choosing to shop online for their groceries. And then when we look at their physical footprint, it gets a bit complex. Kroger has plans to complete 30 major projects in 2025 and then accelerate that in 2026 and beyond.
Okay, so investment there.
But they also have a plan to close 60 stores over an 18-month period.
Okay. That leads us to an important question then. What does it mean for a company to be simultaneously expanding its e-commerce presence, modernizing stores, and closing others? It really suggests a very strategic realignment, doesn't it? Focusing on efficiency and optimizing their physical footprint to truly support their digital growth and adapt to changing consumer habits. It's not simply about adding new stores. It feels like it's about making sure their entire ecosystem works together seamlessly, focusing on targeted evolution rather than just growth for growth's sake.
That makes sense. A strategic shuffle.
Mm.
Okay, now let's zoom out a bit and look at the broader picture. What external factors and internal initiatives have been at play during this past quarter that could influence Kroger's performance? We've certainly seen strong vaccine demand and continued consumer resilience, which has probably contributed positively.
Yeah, the health and wellness side is becoming quite important.
Definitely. And on the internal side, their continued e-commerce expansion, which we just discussed, and product innovation, like that Simple Truth protein rollout, have also been key drivers. When we consider sector and macroeconomic trends, grocery retail generally is experiencing pretty buoyant demand right now.
It tends to hold up, yeah.
It's a sector that tends to hold up well even when other parts of the economy might struggle because, well, people always need to eat.
True.
We've also seen inflation moderating somewhat, which is generally good news for consumers, potentially giving them a bit more breathing room.
But that could also put pressure on pricing power for Kroger, right?
Exactly. That's something to watch closely. Lower fuel prices might also slightly weigh on non-fuel comparable sales, since fuel sales are often tracked separately. Management has also openly acknowledged this broader macroeconomic uncertainty, effectively positioning groceries as a defensive sector.
It's that safe haven appeal during volatile times.
Right.
What's truly fascinating here is how these various elements create a complex tapestry for Kroger. You have the consumer's essential need for groceries keeping demand buoyant, which provides a strong baseline. But then you also have the pressure of moderating inflation and potential shifts in discretionary spending within the grocery budget. People might trade down, for instance. The analyst commentary that often favors Kroger's value creation model speaks directly to their strategy of balancing cost, quality, and convenience for customers in this dynamic environment.
Okay, could you elaborate a bit more on that value creation model? What specific mechanisms make it so resilient, particularly in the face of these shifting consumer behaviors?
Absolutely. The value creation model isn't just a buzzword, it's quite tangible. It includes a strong emphasis on their private label brands, like Simple Truth and the main Kroger brand. These offer quality at a lower price point, appealing directly to value-conscious consumers, especially now.
Ah, private label strength.
Exactly.
Yeah.
Then there's their efficient supply chain, which helps manage costs, and their robust customer loyalty programs. Think fuel points, personalized digital coupons that encourage repeat business and provide valuable data.
So data plays a big role too.
A huge role. This combination allows them to maintain competitive pricing while trying to protect their margins. This model is often highlighted for its resilience, and you can see why. Plus, it's worth noting, Kroger's valuation is currently below industry averages, and its dividend yield and that strong e-commerce growth are frequently highlighted as significant strengths. That makes it an attractive proposition for you, the long-term investor, potentially.
Right, that combination of value, yield, and growth potential. Okay, so what does this all mean for the upcoming report and beyond? For those interested in market movements, it's worth noting that implied volatility in Kroger's options tends to spike. Historically, it gets into the 25–30% range leading into earnings.
Yeah, the market definitely anticipates some kind of move.
It does. It suggests that the market often anticipates a fairly significant price movement around these reports. Now, let's consider a couple of potential scenarios for you. In a bullish case, maybe a positive outcome.
The upside scenario.
Yeah, the upside. We might see an earnings beat driven by strong comparable sales, continued growth in their health segment, perhaps from vaccine-related demand still trickling through, and of course, robust e-commerce expansion. If this happens, it could lead to a reaffirmation or maybe even an upward revision of their full-year guidance.
Which the market would likely reward.
Exactly. This, in turn, could result in a positive share price reaction, especially if there's a broader sector rotation into consumer staples as investors seek stability. On the other hand, a potential bearish case. The downside.
What could go wrong?
Well, it could involve a miss on comparable sales, perhaps due to intensifying competitive pressures. The grocery space is always tough, or rising wage and expense inflation impacting their costs. We might also see margin compression from that moderation in non-fuel comparable sales we talked about, or maybe from charges related to those store closures, or even weakness in alternative profit streams like their advertising business.
Okay. Margin pressure is a key risk.
Definitely. This scenario could lead to a more cautious outlook from management and a muted or negative price reaction from the market. So the key metrics to watch very, very closely will be identical sales growth excluding fuel, and their margin trends, particularly that FIFO operating profit. These will be absolutely critical for understanding the credibility of their forward guidance.
And this leads us to a critical question, doesn't it? While an earnings beat is always welcome and often grabs the headlines,
It does.
the forward-looking guidance on identical sales and operating profit will tell you, the listener, much more about the company's actual trajectory amidst these ongoing macroeconomic currents. Those are the true indicators of sustainable performance and where Kroger sees its path going in the medium to long term, rather than just a snapshot of the past quarter.
Well said. So, overall, our leaning for Kroger's upcoming earnings is, I'd say, neutral to modestly bullish. We're giving it a confidence score of maybe 7 out of 10.
That's about right. Cautiously optimistic.
Yeah. They're generally expected to deliver inline results, supported by the inherent defensiveness of the consumer staple sector. However, as we've discussed, you just can't ignore those broader macroeconomic uncertainties and the competitive risks that are always present in the grocery space. For those of you considering market plays, the anticipated volatility around earnings might present opportunities, but robust risk management is absolutely paramount in this environment.
Always. Don't bet the farm.
Absolutely not. And for our final thought today, something for you to mull over. While we're focused on Q2, keep a close eye on Kroger's guidance, not just for the rest of this year, but looking out towards 2026. Any shifts in their strategic store openings, closures, and those e-commerce targets will be really significant drivers of sentiment in the long run.
Yeah, those forward-looking strategic points are key.
They really are. These will be the true indicators telling us where they envision the future of grocery retail heading and, importantly, how they plan to lead the way. Thank you for joining us on this exploration of Kroger's upcoming earnings. We hope you feel better informed and more prepared. Until next time, keep learning.